June 7th, FedEx announced a strategic decision to not renew its FedEx Express U.S. domestic contract with Amazon. FedEx says that they intend to focus on the broader e-commerce market. They believe there's significant demand and opportunity for growth in e-commerce, and they intend to serve those retailers outside of Amazon. When you saw this news, Dan, what was your first reaction to that, hearing that FedEx is breaking up with Amazon?
So do you have any couple friends that, like, when you go out to dinner with them, you can tell they're going to get divorced at some point or break up, and maybe they don't know it? This is one of those relationships. Amazon was never that big a FedEx customer. It's about 1.3% of FedEx revenue. It was always sort of like we'll work together, but we'll use the post office or UPS first. And for FedEx, this is one of those, if you're not going to have a major chunk of your business come from Amazon, you're better off going to Walmart and Target and all the other big retailers out there and saying, hey, look, we don't deal with Amazon. They don't know any of our secret sauce. They don't have any special pricing. We're not going to we want to work with you. So this sort of makes them more palatable.
Yeah, I was talking about before the show, for our listeners who listen every week to Industry Focus, a couple of weeks ago, I talked with Tim Byers. We talked about Redfin, which is an online real estate brokerage service. And this is a company that announced a new offering that led to Remax, which is another big nationwide brokerage firm, to end its partnership with Redfin. And we said then that, this is one of those things that the path that Redfin was taking, sooner or later, it was going to be so antagonistic to these other brokers that we were going to have this breakup take place. That's what took place for Redfin, and I think that is what it took place for Amazon as they pushed into e-commerce and became more vertically integrated in logistics and showed that was a clear intent of the path of business going forward. Sooner or later, they were going to become so antagonistic to FedEx or maybe UPS eventually that this breakup had to happen. We've seen some analysts say the same thing. Ravi Shankar from Morgan Stanley said, quote, "We believe FedEx's strategic breakup with Amazon is a watershed moment for the parcel industry that signals Amazon's emergence as a significant player in the industry and brings a new level of risk to numbers at both UPS and FedEx." Dan, when you see this shift in the industry, are you concerned for UPS and FedEx going forward?
So I'm not worried about FedEx. This is FedEx saying, you weren't that important to us anyway, so we'll give up this 1.3% of our business in order to be able to work with so many other people. So they expect the size of this business to double from 50 million to 100 million packages a day in the next few years, or by 2026. So if you're FedEx, you're basically saying, we're not going to let any one company become too important to us. Now, UPS, I'm absolutely worried for UPS. 26 roughly % of their business is from Amazon. So if Amazon keeps ramping up its shipping business, which is something they've been doing and are going to continue to do, and they say to UPS, hey, we don't need you quite as much. We can do a lot of this on our own. That is a material, irreplaceable part of their business. So UPS is in so far, I don't know that they could even get out of it. And yeah, eventually, Amazon is either going to crush them or buy them.
Yeah, you can look at a chart. I think you sent this over to me, Dan. Wolf Research had this chart out where you saw in 2013, UPS was 49% of Amazon's shipping business. Today, in 2018, their numbers have the UPS being 22%, with much of that market share being taken away by Amazon, which now represents 26% of the logistics that are run through that website. So obviously, in the near term, this is going to be a benefit to UPS. Only UPS and FedEx have these express networks, which is the business that FedEx pulled. But, as you say, Amazon is pushing more into logistics. They want to put more logistics in-house because it's less expensive to them than fulfilling orders through UPS and FedEx. And they have called out specifically in their filings that the transportation and logistics services are an area in which they compete. Amazon has been making some recent investments in these areas to build out their presence. Can you talk about that a little bit, Dan, and what that means for the company?
Yeah, so Amazon has been investing everywhere from last mile. We've talked about their van network, where they're literally getting entrepreneurs to lease vans, helping them do that, and doing last mile delivery. Then they're massively building out their plane force, their plane fleet. And that's where they're sort of encroaching on what these other companies are doing. In addition to that, of course, they have their trucking fleet, which is they're actually selling space against UPS and FedEx. So Amazon isn't just delivering its own stuff. It's become a full-fledged shipping company. And it wants to control as much of its own process as it can. And that includes testing things like building new, smaller warehouses, warehouses shipping out of Whole Food stores, maybe shipping out of some Kohl's locations where it has a partnership. This is something that you're outsourcing it. You see that you're spending more money, and they are building as fast as they can possibly build, but they are hitting some brick walls in that we've done shows about the trucking shortage, so it's hard to hire truck drivers. It's also incredibly difficult to hire pilots.